Hi and welcome to this live currency strength indicator tables video. My name is John. I'll be taking you through the charts this Monday, the 9th of January. Here you can see we have the live currency strength tables in front of us. We have two types of tables. We have the trend traders table and the day traders table. These are showing the same studies but just highlighting different time frames. You can see here some of the currencies are highlighted in green. That means there's a confluence between those two trading time frames, and that's where we're focusing most of my attention when going through these videos. The tables auto update every 15 minutes 24/7, so our members can log on at any time, day or night, from anywhere in the world and see exactly which way the markets are moving in real time. So what are the tables showing us today? Well, we can see that the trend traders is telling us that the Australian dollar is the strongest currency. That is followed by the Japanese yen, which is then followed by the Canadian dollar at S3. W1, which is the weakest currency, is pound, followed by the US dollar as W2, followed by the Swiss franc in W3. From a day trader's perspective, S1 is showing that the Australian dollar is the strongest currency, followed by the New Zealand dollar as the second strongest currency, followed by the Canadian dollar as the third strongest currency. However, on the day traders weak side of the table, you can see that the yen appears twice, but this time it appears as W1 on the opposite side of the table. It's then followed by the US dollar in W2, followed by the Swiss franc in W3. So we're going to focus on a few of these currencies today. In particular, I quite like the idea of looking at the Australian dollar against a couple of the currencies, but I do have some others to feature. So Aussie yen is definitely going to be featured, and Aussie US dollar, because yen is topping the day traders as the weakest currency. But I am also going to take a look at dollar CAD and New Zealand US dollar, so make sure you stick around to the end to watch those other currencies. Diving into New Zealand US dollar first, so I'm going to go through Kiwi dollar first. We're already on the page, and you can clearly see what's happening in this market because we've already got the levels mapped out for us here. You can see that the price has come into the 0.62 handle recently, which is something we discussed when the market was hitting the 0.6450 handle. And actually, we spoke about this last week because New Zealand US dollar was on the tables for further downside. However, we highlighted the fact that we were at a really strong level of support, and that has acted as support now, and price has traded through and broken through this trend line resistance here and the previous structure highs. So now it's looking like the New Zealand dollar is heading back to the 0.6450 high, even could extend up to the 0.6550 handle if we do get a significant close outside of this high. What we don't want to see is price come back down and close below that high. If it closes below that high, that would suggest that we're actually going to see another move back to the downside. What we want to see is a close above the high. Now, from a day trader's perspective, you may want to be looking at a lower time frame, perhaps the 4-hour time frame, and mapping out the previous highs as an area of structure. So if I just put in this rectangle here, you can see that the market has found resistance at these highs on numerous occasions. So if price was to pull back into this area, find support, then we could look for those long opportunities up to the 0.6450 handle. Moving on to the next chart of interest then, so I'm actually going to skip over to Aussie pairs, and we're going to go over to Aussie US dollar first. Again, look at how price is breaking out of this area. If I actually just jump up to a weekly time frame first, you can see that we're approaching a trend line resistance through here. We're also approaching that 0.7 level, which is crucial on Aussie US dollar. If I just zoom out, you can see how important that level has been. We've got these November 2019 highs through here, April 2020 highs, August 2020 lows. We've got September 2021 and October 2021 lows through here. So you can see how important this 0.7 level is on Aussie US dollar. You could probably go further back as well and see how important it is. So the likelihood of us, when we're rallying to the upside here, is that 0.7 could be tested in the future. So if we go down to that daily time frame now, what's happening? Well, price is trading through the 0.6875 handle, which is basically a sort of range between the sort of 0.6650 handle and the 0.6875. We've now traded through that, so it does suggest that we're going to see that upside into the 0.7 handle through here. So what you could be looking for, again, wait for a potential close outside of that level, or have a little look at how price is reacting on a pullback. You can see that we've rejected this area before. If price was to come back in, could we reject it again? We've got confluence perhaps with the 200 moving average. If that can start pulling back to the upside, that would also give us nice confluence to trade higher. And from that area there, you've got a nice risk reward ratio, because you've got the at least 125 pips to the upside to be targeted if you were to get some kind of buying pressure down at this support level. Going on to Aussie yen then. So why are we interested in Aussie yen? Just remember the tables is showing us that Aussie yen is topping the table, with S1 being Aussie and the yen being W1. And you can see here price has broken out of the 91 handle here, where it was significant support and resistance. Most recently was the December end of December highs in here, and price has now breached through that level. So the next level of resistance from a short-term perspective is the 92 handle, which we'll take a look at in a second. But the 93 handle here is quite a nice one to look at as well, because you've got the 200 moving average confluence running through there. We also have this trend line resistance running through as well. However, it would mean that price would need to trade through that trend line in order to reach the 93 handle. If I go to the 4-hour time frame, actually, you can see this 92 handle is fairly significant, because the last time price visited this area here, we had a significant drop in the market. Now that drop was around about 460 pips to the downside, so that has to be a significant area of importance. So if price does get back to that level there, will we see sellers coming in the short term at that point? If so, you may want to look even lower for a day trading perspective. You may want to jump on your 15-minute time frames. You can see that price has recently breached this consolidation here. Maybe we'll see a pullback continuation to the 92 handle. If you're a little bit more conservative, I'd probably wait now. I'd probably sit on my hands a little bit, see if price can reach that level, maybe pull back down towards this 91 handle, where I could then look for that trend trading opportunity after price has rejected here a couple of times in the past. So that's something to consider there on Aussie yen. Now finally, another chart of interest that I quite like the look of is dollar CAD, because again, what we've seen at the moment is price breaching a lot of ranges that have recently formed in the market. So again, if I just bring in the tables, you can see the dollar's on the weak side on both of the trend traders and the day traders. CAD's on the strong side at S3 on both tables as well. Now what's recently happened here, if I just go up to a weekly time frame, price has recently breached a bullish channel. We've rallied up into the 139 handle, where price came back down. We retested the other side of the bullish channel, rejected again. However, this time we have formed a lower high, so it looks like we could be heading back towards the 132, or at least these weekly lows previously. Now looking at the lower time frame there, you can see the daily time frame. You can see that price was range bound pretty much through this period here between sort of the end of November and the start of January now. So throughout that December period, we pretty much moved sideways between the 1.37 handle and the 1.35 handle. Now price has traded out of that level. We can now look for those opportunities. So trend traders, what you may want to look for is price to come back into the range see a rejection of the range and then look for a move down to the 132. Alternatively, if you're a day trader, like I said previously, you want to be looking at those shorter term pullbacks. It does look like we're running out of a little bit of momentum here, just because of how aggressive the selling was previously. It's not as aggressive in this period here, so we may get a short term pullback or retracement and then look for a continuation to the downside here, potentially for $CAD after a breakout of this range here. So I'm going to leave it there. Please do remember that we always look at these tables for our trades and opportunities. Like I said, Aussie yen looks like the one to watch on a day trading perspective, so keep your eyes on that one. I hope you've enjoyed this video update, and I look forward to speaking to you in the next one.